Well, it obviously had that spike when Israel attacked Iran initially. It was funny. I was talking to a market participant the other day, and he just said at that moment, he said when it hit, I think it nearly went to $81 a barrel, didn't it? And he said I was shorting it all the way up at that price. And as soon as it broke above 71, I was shorting it because I think at some point it will revert back to the fundamentals, and the fundamentals of supply and demand right now is that the world is awash with crude oil, and the
economy is not great either, is it? The global economy, not great.
No, it's not. And even if you take Iranian production out, which is 3 million barrels a day, that has a negligible effect, I think, because the Saudis are pumping so much. America is now an exporter of crude. The world is awash with oil. And as you say, David, the demand is sort of fairly sketchy right now. So we're not as dependent globally, the economy, on crude as once we were.
I think one of the other things, I don't know whether it irritates you, but God, it gets me on my high horse. It's as we used to say in the old days, it gives me a dose of the pip, which is a chicken disease, in case you didn't know it, is the fact is sanctions haven't worked anywhere around the world with Russia. There's always been a way out, hasn't there?
Well, except that the Russians are not price makers on their energy exports. They are price takers. So China and India, who we know are buying a lot of their output. The Chinese are getting a 30% discount. The Indians are probably getting between 20 and 25% of a discount. So yes, the stuff's getting out there, but the Russians are not making what they would be Paravis.
No, but on the other side of the coin, it also drags the official price down, probably from where it probably would be.
Of course.
And you can listen to the full version of that podcast wherever you get your podcast from.